We're getting our latest look into the investment moves of some of the richest and most successful investors in the world. Leslie Picker joins us now in her deep dive into the 13F filings. And Leslie, good morning. What are the headlines?
Hey, good morning, Kelly. Yeah, it's really fascinating timing for 13Fs this quarter, which of course show fund positions as of March 31st, which was just a few days before Liberation Day shocked the market. So we were curious how investors traded Chinese tech during Q1, and much of it was pretty bearish. No surprise there, perhaps. David Tepper's Appaloosa paring back holdings in Alibaba, Baidu, JD.com, and PDD after making a big call on the space last year. Coatue sold JD.com, PDD, and sold shares in 3 Chinese fintech companies as well. However, Coatue did buy more Alibaba during the quarter. Tiger Global boosting its stake in PDD Holdings by 68% to hold roughly $500,000 as of quarter end. So a bit of a mixed sentiment there. Outside of Chinese tech, Berkshire Hathaway selling shares in the banking sector. Warren Buffett's firm unloading its entire stake in Citi and paring back B of A by more than 7% and Capital One by 4%. Berkshire Hathaway adding to some of its consumer-facing companies, however, also doubling its stake in Constellation Brands as well as Pool Corp, and it increased exposure to Domino's. The firm didn't touch its $67 billion stake in Apple during the quarter. Of course, that's always closely watched. And guys, Berkshire has a secret. Its 13F included a footnote that said the SEC granted one or more new holdings confidential treatment. So stay tuned on what that might be in the forthcoming quarters, perhaps, guys.
Very interesting. So what do we, even though they're 45 days late, Leslie, these do kind of give us a window into sometimes where the momentum is or where it's not, or where super interesting undervalued opportunities might be. I mean, did we kind of glean anything here?
It's interesting, Kel, because the 13Fs came right after the Sohn conference, and it felt like from the Sohn conference, a lot of the picks involved some of these cyclical names, maybe industrials, international equities. You didn't see that as much in the 13Fs that we were combing through. They really were kind of paring back more cyclical exposure, focused a bit more on the U.S. than some of these international names. So I think that's partly a microcosm of just what we've seen over the last 6 weeks, perhaps. But kind of interesting to note just as a anecdotal evidence of what people are doing.